welcome back to another show. This time we are going to focus on the alcohol industry because alcohol stocks have performed relatively poorly over the more recent past, the last year, but also if we look at the 5-year time frame. So we are going to take a look at why this sector is so out of favor, if there are any risks investors need to be aware of, any opportunities because of declining share prices. Andrew is with us again, and I guess we will just kick things off. Do you want to say hi, Andrew?
Hi, Andrew.
Awesome. So what you can see on screen right now here is an image that Andrew actually shared in our mental models community this weekend. I thought it's an interesting picture to kick things off here. And Andrew, what are we seeing here?
It's the top shelf of my refrigerator. It was a joke. It was kind of it was just a joke post I sent to the group. I said, "Aren't we supposed to buy what we know?" But just
Yeah,
joking around because I am a
titled it.
shareholder in pretty much all those beverages. Well, with the exception of the water from BJ's. But
Walk us through the publicly traded companies we are seeing here.
yeah. So on the like I said, excluding the water, but on the left is Boston Beer's kind of newest actually growing category. It's a very promising brand of theirs, but it's called Sun Cruiser. To the right of that, I'm sure everyone's familiar with Celsius. To the right of that is kind of a speculation company. Honestly, there's a good chance they'll go bankrupt, but it's a healthy energy drink. It actually is healthier, a lot healthier than Celsius and stuff like that. But that's called Yerbay. I believe the traded ticker is YERBF. And then Vita Coco on the right, ticker symbol Coco.
Yeah. And I described it as Peter Lynch style investing. So pretty much what you already said. The beverage industry and so the alcoholic beverage industry as well is certainly an industry that most retail investors will be able to understand. It's not a particularly complicated business. I would say it's fairly straightforward to understand. And if you do the work, talk to people in your social circles, probably also an industry where you can actually understand the position of different companies, how their brands are doing, whether they are developing favorably or not, things like that.
Yep.
What we might point out to start is that within the alcohol industry, there are actually 4 major categories to be aware of. One being spirits, and within this category, some common drinks would be whiskey, vodka, rum, tequila, gin, and brandy. Then you have the 2 categories most people would maybe immediately think of. So that would be wine and beer. And then, Andrew, you actually mentioned this to me, that beyond beer is sort of a new emerging category. Can you
Yeah.
tell us
So
a little bit
that's
about it?
yeah. So that's the phrase was coined from the founder of Boston Beer.
Oh, really?
Jim Cook. He kind of founded it. So anyone who I guess knows beer or is deep into the bit, whether you're a shareholder of Boston Beer or not, if you're really into like craft beer. So Jim Cook, I'll kind of get into a quick backstory. I'll keep it real quick and then kind of to get to beyond beer. But Jim Cook was back in like the 80s, in America. It was the big beer brands, you know, Bud Light, Anheuser-Busch, right? Those companies. And he just wanted a better tasting beer. So he was only doing small barrels, and that actually, if you're under a certain volume, that categorizes it as craft beer. And he was making beer out of his kitchen and selling that. Well, that started actually 20 years, multi decades of massive growth for the company and for the category as a whole. So that was taking beer, which really for the next 20 years as a category was pretty much flat. But within that category, you had a massive growth subcategory, which was craft beer, and this massive craft beer movement. So he's kind of known as like the godfather of craft beer. Well, craft beer really isn't growing much as a category anymore. You have a lot of new entrants and stuff coming in, but as a
Mhm.
category, it's not really growing. Beer really isn't growing. But once again, within the alcoholic beverage space, right? So spirits not really growing, wine's not growing, beer's not growing, but there's still as obviously as share declines for some of these categories, there is a subcategory that's very small, but it's growing like a weed, or there's certain subcategories, and that's what Jim Cook calls beyond beer, right? So about a decade ago, you had cider that was kind of, it was kind of brewed somewhat like between a mix and a wine, between a beer and a wine. So you didn't really know where that fell. Well, that's
What I
cider.
should say, Andreas,
So
I'm not a big alcohol consumer myself. I
yeah.
do enjoy my glass of cider every once in a while, though.
Yeah, cider's good. That's actually probably when I was like underage drinking. I think cider was the easiest, or the first thing for most teenagers to tackle, just because it's goes down a lot smoother than your traditional beer and vodka and such. But yeah, so you have this category of what's called beyond beer, where there is actual growth in the category, and you just need to, as a brand, kind of position yourself well. So you have these flavored malt beverages. So, right, Boston Beer Company owns Twisted Tea, which has actually been on a growth, mid, 20% plus growth trajectory for 20 plus years now. I mean, it's a bit, but it started on such a small base, but now it's I think 65% of their entire business, and it's still growing at double digits, right? So you have the hard seltzer category, which saw massive growth for about 3 to 5 years, but that was kind of a bubble that popped, right? So, but as you have listed here, there's a bunch of subcategories in the alcohol space that are actually growing, are seeing significant growth. Ironically, now a category of the beyond beer that's seeing significant growth is actually non-alcoholic beer. So it's things that taste like beer, but it doesn't have the side effects of alcohol. So yeah, so there is growth, but overall the alcohol industry hasn't been growing for decades now. It's actually been on a slight decline.
And that is sort of reflected in the stock performance. So I've actually prepared two charts here. Three actually. I added one more. So in this chart here, you can see the 1 year performance of a couple of spirits names. So what I mean by that is companies that are primarily focused on different spirits. I included the Boston Beer Company, and when I shared this slide with Andrew, he actually pointed out, well, Boston Beer is maybe not a good comparison to the others because it's more focused on other categories. We'll get to this a little later. But what you can see here is that many of these names have performed pretty badly over the last 12 months. So we have Brown and Forman down around 7 to 8%. Then we have Diageo down 13%. Pernod Ricard down 17%. The Boston Beer Company is down 21%. Campari is actually down 30% over a 12-month time period. And then the worst performer over that time window is Remy Cointreau. I'm sure I'm going to butcher that name here, which is down 45%. Do you know how to pronounce it? It's French.
No, I've never actually even heard of that company, honestly, until seeing the slides.
I mean, a 1 year time period is a super short time period to look at in the world of stocks. I would argue it's pretty much meaningless to assess whether we are looking at an opportunity, like whether the share price decline represents an opportunity, or let me put it this way, whether the share price performance reflects the underlying business performance. That's what I was trying to say. What I find interesting, however, is that all of these names have also performed pretty badly over a 5 year time horizon, which again is a significant amount of time. And personally argue, and someone actually, I don't know which investor it was, it might have been Monish Prabhu. I think he once said, if you make an investment and after 3 years the share price hasn't gone anywhere, you probably made a mistake. And I think the point he was trying to make there was that over the short term, the share price can do whatever it wants, right? But as you extend the time horizon, eventually the stock price will reflect the underlying value. And if we look at a 5 year time period, I think if the whole category is performing quite poorly, chances are the underlying businesses have probably also not performed very well over that time period. That's all I'm trying to say here. So if we check the performance here, so again, we have Campari down 8% over the last 5 years. Brown and Forman is down 16%. Diageo is down 10%. The Boston Beer Company is down 30%. Then Remy Cointreau is down 47%. And just to show how the benchmark, the S&P 500, performed over that time period, the S&P is actually up close to 100% over that 5-year time period. So when I see this, Andrew, I get interested. Of course, as we will discuss soon, overall, I would say the alcohol industry is actually an interesting industry to look at. And if so many businesses have actually, I don't know if I can say massively, but they have definitely underperformed the S&P quite a bit over that 5-year time period. I think it's worth taking a look and see whether you can find an opportunity here. And all you need to find is one stock in that category, right? That maybe presents an opportunity. Because oftentimes in the world of stocks, when one industry is maybe facing challenges, oftentimes the entire basket as a whole is quote unquote punished.
Mm-hmm.
Just to wrap up this stock performance part here. What I created here
these would be better comparisons for the Boston Beer.
Yeah. So in this chart, you see the performance of some beer companies being, or namely Anheuser-Busch, the Boston Beer Company, Molson Coors Beverage, and Constellation Brands. And similar to the spirits-focused companies, these stocks have also performed badly. They're pretty much flat over a 5-year time period.
Yeah, certainly they have not been good investments for five years.
Yes, and we will discuss whether this poor stock performance is justified or not, basically, in this video, and whether it's worth taking a closer look at some of these names. Before we do that, though, a little disclaimer here. As always, we are not financial advisors. We encourage you to always do your own due diligence when buying or selling securities. We are just sharing our own opinion. We are basically creating this video for entertainment purposes only. So, Andrew, I'll show you one more chart here. This one is not reflecting the stock performance, but the valuation multiple, namely the enterprise value to operating income multiple. The names I listed earlier are trading at. And what we can see here is also a downward trend. So this basically shows me that the stock decline of these businesses is partly attributed to a decline in the valuation multiple and not necessarily attributable to a decline in underlying economics. But we'll get to that a little later. Do you have anything to comment on what I was saying over the last couple of minutes?
No, not really. I mean, it's true. They've been bad investments over the past 5 years, and as we got into, I mean, it's probably justified.
Yeah. Business models. As I said earlier, when I shared that image of your fridge, I think the business model of alcohol companies is pretty straightforward. Basically, they are producing, marketing, and then distributing a wide range of different alcoholic beverages. As we will see, some of these big names that I was displaying already are highly diversified when it comes to the different alcohol categories. And they often do so, like produce, market, and distribute these drinks on a global scale, which I think makes them also fairly attractive. If we look at Diageo, for example, actually created a video on that stock earlier this year, and I rewatched it in preparation for today's session, actually. Diageo is a leading spirits and beer company. It owns and manages some iconic brands such as Johnnie Walker, Smirnoff Vodka, Guinness Beers, or Baileys. And obviously, what this company has been doing for many decades now, it has been building strong brands that give them pricing power. Some of these brands are able to charge premium prices, which of course is reflected in satisfying profit margins for the business. And what Diageo is doing, and we'll get to this again later as well, is their global distribution network basically allows them to leverage these brands on a global scale. I think this was one of my takeaways from our Celsius discussion 2 weeks ago, is that in the beverage industry, distribution is super critical and might even represent an economic moat to some extent at least. And that's equally true, I would argue, for the alcoholic beverage industry.
Yeah.
So just to show you how diversified some of these companies are, I've prepared a couple of slides on which you basically can see some of the brands that these businesses own. And Diageo, for example, owns more than 200 different brands. That's a very high level of diversification in terms of different beverage brands. And the ones you might be familiar with would be the ones I already listed: Johnny Walker, Guinness Beers, Baileys, Smirnoff. Personally, I'm not all too familiar with some of the other brands. Captain Morgan is another brand I'm familiar with. Which other names do you know? But this one is known too, right?
Yeah, I over here in the U.S. Plus, I do enjoy shopping for alcohol and stuff. All these brands I recognize.
Yeah. So. And if we look at, actually open another tab for this, at the brands of Pernod Ricard, for example, they own what they call premium brands, 240 in total. And again, just to list some examples, that would include Absolute Vodka, Havana Club. Which other ones are you familiar with?
Oh, geez, Malibu, Ricard. Not as many of theirs as I am with Diageo. Absolute, yeah. So
yeah, I'm just going to display all of this in the video, and then people can share which brands they are familiar with.
Yeah.
But the point I'm trying to make is that we are not looking at companies here, or oftentimes looking at companies that just possess one or two brands, but they are, as I said many times now, highly diversified in terms of their brands. And
yeah, they're really alcohol conglomerates. That's really what it is. Exactly. And I mean the main category, especially in the U.S., is comprised of 3 to 4 companies, and then Boston Beer being your 5th. But yeah, it's definitely an oligopoly.
Exactly, and as I said, Diageo, Pernod Ricard, and some of the other brands or companies I mentioned, they are primarily focused on the spirits category. If we think back of the different categories, or the 4 main categories within the alcohol industry. And what we discussed beforehand, and maybe we can pick this up here again, Andrew, is whether one of these categories or some of these categories are more attractive than others. Because the point I was trying to make is that my hunch would be that I think the spirits category is more attractive than the beer category, for 2 reasons. I argued that it's probably more attractive because you will have more premium brands within the spirits category. And I think some brands will be able to have more pricing power in the spirits category compared to the beer category. And then also my hunch would be, and I think that's sort of backed up by data as well, is that the spirits category is facing less structural headwinds than the beer category is. Would you agree with that take so far?
Yeah, I would agree. So the way, if we go back to those 4 categories, right? Spirits, wine, beer, and beyond beer, the least attractive would be the wine category. Now, if you're a business owner, wine can be very attractive. If you own your own vineyard, and you can have, but it doesn't scale well, right? Wine doesn't really scale well. People like these niche small brands, but it doesn't travel well. So wine, if you're a business owner, can be a great business, but as an investor, it doesn't really scale well. So wine's kind of out of the picture, right?
I was actually thinking the same, Andrew, when you mentioned craft beer earlier. I was also thinking the whole point of craft beer is that you have this niche, unique feeling to it, right? So these kind of brands don't really fit into these conglomerates, as you refer to them, that really want to leverage their global distribution network.
Yeah, that's something that's strange with Boston Beers. Their Samuel Adams brand. It's still technically a craft beer. It's the #1 craft beer, I believe, in the world. But it's weird. It shouldn't have. And Jim Koch talks about this too. Like, he should not have succeeded the way that he did. Like, it's very peculiar that a small craft brand like that traveled the way it did. Now, you do have some craft beers that have kind of traveled across the US, similar to Sam Adams, but most of them are very, very just stuck kind of to their own region. So yeah, but the beer, so getting back to the categories, right? So the beer category, that's also, if we just think your traditional beer, that's been on a decline. Volumes have been on a decline. It's the revenues being offset pretty much by price increases, but I mean that's a category that's just been on a decline for decades now. So that's not really too attractive. And the issue with beer is that, and we'll get into with spirits, is that beer is pretty much just only plays in its own space, which is beer, right? Whereas spirits, even though, yeah, volumes may be flat over decades with pricing power on top of it. So you might have seen some growth in spirits, especially certain brands of spirits. The interesting thing with spirits is that once you establish a brand, going into this fourth category, which is this beyond beer category, which is there's really no rules to it. You have beers acting as wines, acting as canned cocktails. So your beers mixed with spirits, right? At least the spirits, you can take that brand name and you can use it in that beyond beer category. So you're seeing Vita Coco partnering, which isn't even an alcoholic beverage, but they're partnering with, I believe it's either Captain Morgan or Malibu.
Mhm.
And they give out a canned cocktail, which kind of falls into that beyond beer category, right? So that's the benefit to spirits, is that you have these established brands. They can at least, they're more dynamic. They can play in other categories, whereas wine and beer, not so much.
Yeah, yeah,
So.
yeah, I agree. I would even argue that will be sort of a concluding point I'm going to make later on, that you want to assess the opportunities within that industry on a company by company basis. And I would even argue, if one company has high exposure to the beyond beer category, which sees more growth and has probably a longer runway for growth ahead of it, this one might actually be the most attractive one, simply in terms of growth opportunities.
100%, which, as obviously we'll get to, why I'm invested in that
Yeah.
space. Yeah. Because here's the other thing too. Most of these, we talked about, their conglomerates. The issue with a conglomerate, right, is that for the conglomerate really to grow, to have a brand that's really going to affect them due to their size, the category that they're primarily operating in too, has to be growing. As we just talked about, alcohol, just like cigarettes or whatever, which we'll talk about later, is really on a decline, but it's subcategories within there that's seeing volume growth. And even though they might have a brand that might operate well in that beyond beer category or whatever, the actual overall effect to their revenues, to their net income, it's not really going to make much of a dent for them, which is why 99% of the companies in the space I actually would rule out myself, unless maybe you could get it for 3 times earnings or something like that. But by and large, I would rule out most of these, just because they're not small enough where they're going to be able to see enough growth moving forward.
Yeah, yeah. I'll say 2 more things before we move on to our discussion on the attractiveness of the industry. First of all, and I'm going to display it on screen again, I was actually reading an interesting Bloomberg article before this session focused on Italian vineyards and how they are struggling because of the headwinds, the slowing and declining consumer demand. But also, apparently, many of these local family-owned businesses carry quite a lot of leverage, and the rising interest rates has apparently also really burdened them over the more recent years. And then the other thing, just to complete this sort of introduction, I guess, is this chart here, which shows the total revenue of the different spirits-focused companies that I showed you earlier generate, and just to get a feel for who the big dogs in this industry are. So we have Diageo with a total revenue in its last fiscal year of around 20 billion, followed by Pernod Ricard with 11 to 12 billion. That's euros, actually. Then we have Brown-Forman with around 4 billion, so significantly smaller than the other two. Campari with around 3 billion euros again. And then the last one is Remy Cointreau again, which is a much smaller player with around 1 billion euros in revenue. Many of these companies, I think we mentioned this, haven't mentioned this so far, actually not US listed. So Diageo, I think, is listed in London, actually. I think
it might be. There is a US ticker, though, I believe. But
yeah, I think they have a New York Stock Exchange listing as well. But I think it's a British company. Then we have Pernod Ricard, which is a French company, and Campari is an Italian company, as far as I know. So industry attractiveness. So I want to kick this discussion off with a fun fact, because you already alluded to the fact that we are going to draw a comparison to the tobacco space in just a second. I came across this crazy statistic in preparation for this video. So Altria, which is, I think, the biggest tobacco company that is not only publicly traded, but that is doing business, formerly known as Philip Morris. The stock of Altria returned 16.8% over pretty much a 100-year period, which basically means for every $1 invested in 1925, you would have $2.6 million US today, which I think is absolutely mind-blowing. I would have had a hard time thinking it's even conceivable to grow at such a high rate for such a long period of time. And I'm just showing you this fact here, but that statistic, because I think it points out that it is an attractive industry, the alcohol industry. And I think that's because there are a lot of similarities between the tobacco space and the alcohol space. Any comments so far? Any comments on the statistic?
Yeah, there's well, it's yeah, that's certainly that would have been nice to been able. I wish my grandparents invested in that back in the day. But no, the one thing, the one issue with the spirits industry versus tobacco or spirits, alcohol in general, is just there's that stickiness to it. But there is a lot more competition in the space. I feel like it's heavily government regulated, but it's still by and large far less regulated than the tobacco space, which I believe set it up for far better returns than we'll see with the spirits category.
Yeah. Would you argue even today still the tobacco industry is more attractive than the alcohol industry?
So here's, and this is just
my hunch would personal. Be, again, I can't back this up with data, but my hunch would be that the structural headwinds are even stronger in the tobacco space than in the alcohol space.
Yeah, but I guess you have with those Zyn pouches now, and you're seeing vaping and stuff. Kind of that's their version of Beyond Beer. Like it's a small category, but it's growing like a weed. And then you have the tobacco, the overall, cigarettes and stuff that's declining. That's very similar to the beer category, right? My issue where I will invest, these are both categorized as sin stocks. I will invest in alcohol where I will not invest in tobacco is, and this is just a personal opinion. Viewers could disagree with me.
I'm sure
my take, my take is that and just like the dating app. So you and I have talked about that before too. I don't believe tobacco does really any good for anyone. Whereas, and here's where people might disagree, whereas something like alcohol, obviously you have anyone that abuses anything, right? And obviously there's side effects. But I personally, in my experience with alcohol, is that it does many times lead to great outcomes. You can have a great time, let loose. Some of my best memories are under the influence of alcohol and everyone enjoying themselves, having a good time. So I do believe that you get some benefit from alcohol when used properly.
Andrew, I'm actually going on a bachelor's party weekend trip starting tomorrow, so I'm sure there will be some positive side benefits, hopefully.
Yeah, exactly. And like I said, there's idiots with everything. No matter what you're using, people behind, obviously, vehicles, right, have been great to society, but obviously you get some jackasses that drive 100 miles an hour and kill a family, right? Like so obviously there's always side effects and downfalls to everything. My issue is just, like I said, tobacco. I don't see a single benefit to that, whereas at least alcohol, I can kind of see the plus side. Social media, people would argue, is kind of the same thing as well. So yeah, that's the only difference why I literally, I don't care how cheap it is or whatever, putting, just pure money aside, I don't think I would ever touch tobacco, whereas alcohol, I'm okay with investing in.
Okay. So I jotted down a couple of points here that should highlight why I think both industries are reasonably attractive. I don't think we're looking at the most attractive industries in the world, but certainly industries that I would consider in my circle of competence and where I would feel comfortable owning some stocks if we leave moral considerations aside for now. So one would be that I think in both industries, the companies can benefit from brand moats, so strong brand equity that they have been building over time, brand recognition, and also sort of associated to that brand equity, the consumer loyalty. That might even be stronger in the tobacco space. Again, I think once you have found your cigarette brand, I think you stick to it pretty much for forever, and that's at least my understanding. Maybe to a lesser extent in the alcohol beverage industry, but I think there's still
It's very
quite a lot
similar.
of.
I think Bud Light is a perfect example of that. You had the Bud Light controversy last year, and their revenues got hit very bad for several months, and I think now they're pretty much back to where they were at the beginning of it all. So,
Yeah,
brand loyalty is definitely there for certain brands.
yeah, great example. And I think developing brands usually takes a lot of time, which makes this type of mode sort of defensible. So again, I just listed a couple of examples from the Diageo portfolio here again. So the Guinness beer brand was actually founded or first launched, I guess, in 1759. Then Smirnoff vodka is more than 100 years old. Bailey's, yeah, more than 50 years old. And Johnny Walker again was founded or first, how would you say it, and first consumed in 1820. And again, that is something competitors cannot quickly replicate. Building brands takes time. And I guess that's something that you pointed out in our Celsius video as well. You might have the chance to see changes in consumer preferences early enough as an investor if you really observe your environment carefully and transcend consumer preferences. Then the second point I jotted down is that both the tobacco and alcohol industry sell products with inelastic demand, meaning that consumers tend to continue purchasing them regardless of the economic outlook. So if you're tobacco addicted, you're not going to stop consuming or smoking just because we have a recession. And I think that's largely also true for the alcohol industry. Even if we have a recession, you're not going to stop having your beer with a neighbor.
Yeah,
That's
which is peculiar the time frame we're in, because that is actually what we're seeing. But with the alcohol space or whatever, a big change, right? The overall category, for the entire category to be down 1 or 2%. That's a big change for the entire category, which is kind of what we're seeing. But even right now, when we're in the time frame where we're seeing a big change for the category, it's still only a couple percent, right? It's nothing that you're going to see drop off a cliff 10-20% or something. So it's very
exactly.
stable in that sense. Yep.
Yeah. Then I would argue that companies in this space, and I should clearly point out that this is certainly a generalized comment I make here, because that's not true for all companies, but companies can have significant pricing power. This goes or is sort of tied to the topic of or the trend of premiumization in that space, which not all companies benefit from. Going back to the Bloomberg article and the Italian vineyards that were mentioned there, those are partly not premium brands. And I would say, especially in the spirit space, as I said earlier, some brands are really perceived of higher value, which gives the companies that possess these brands pricing power, which again, investors or as an investor, you would like to see, because this will show up in a more attractive margin profile. And I've actually created on Koifin another chart that shows the EBIT margin and the free cash flow margin of, again, the companies that I have listed a couple of times now. Just to back up the claim I'm making here, so we see fairly stable operating profit margins. Obviously, free cash flow margins fluctuate a little more heavily. But if we look at the EBIT margins, just because they tend to be a little smoother, we see margins, profit margins in that category. And I'm not sure if you would agree with me here, but I feel like this chart is sort of backing up the hunch I had earlier that in the spirit space, you might have more pricing power leading to more attractive margins. So the spirits companies here, they all post margins around 20%, some as high as 29% in the case of Diageo, actually.
Yeah. Beer can be as good. Boston beer wouldn't be a good comparison, especially well, number one, they've always had they've actually always had, typically in their history, have had very good gross margins but lower net margins, just due to they've had a lot more revenue growth than their competitors. So a lot more of their cash flow has been going into SG&A. So that's typically why they have lower margins, but especially over the past few years, they've had a lot of issues with trying to offset certain downfalls with the Truly business and stuff. So I wouldn't use them as a comparison, but
Yeah.
you could look at Bud Light, or Anheuser-Busch, I should say, Constellation Brands. They all have typically very good margins as well, but you are correct. Spirits typically would have higher margins just due to the higher price points.
Yeah. And if a company is able to reinvest at attractive rates, a 10% profit margin is not a problem, right? So it's not bad per se. It's just not as attractive as maybe some other players in that category. But a company posting quote unquote just 10% EBIT margins would not immediately make me reject that idea.
Mm-hmm.
All right, before we move on, I want to encourage the viewers to comment what they think of the alcohol space. Have they looked at any of the companies we mentioned so far? Have we maybe missed out on some companies, which we certainly have? Do you agree with some of the takes we are sharing here? We would love to hear what you think. And we're always looking at the comments. Andrea, I saw that you always check out the comments as well and engage sometimes with some of
Yeah, I have nothing better to do with my time, right? No, since I'm not
So
making
we look
YouTube
forward
content
to have a
anymore.
discussion
Yeah.
in the comments down below as well.
Yeah.
Moving back to the attractiveness of the industry, I have a few more points here. Then I noted down that in both industries, companies, or some companies, the big companies, oftentimes the publicly traded companies, they access global markets, which again is sort of tied to the distribution network and the distribution mode, if you want to call it like this, that I mentioned earlier. One point I want to make here is a big takeaway from studying Diageo earlier this year for me was, and I found that super interesting, is that Diageo, a significant portion of growth for these companies actually comes from acquiring other companies. So it's inorganic growth and not necessarily organic growth. However, the big companies, they can actually acquire businesses or beverage brands at a higher purchase price than maybe smaller competitors, because their large distribution network allows them to still earn a good return on that purchase, which a smaller player that would pay the same acquisition price would not be able to achieve. And I found that super interesting. And that's certainly a Moati characteristic of these businesses.
It's a natural oligopoly. That is one of the perks of the industry. Yeah.
Yes.
If you're a new competitor, obviously it's tough to break through. But if you can break through, you can get to 50 million, 100 million in sales, where you can start to turn a profit. Yeah, it's a good chance your brand will probably be acquired.
Yeah. And I've also included two charts from, again, Diageo and Pernod Ricard that basically show, well, the global distribution of their revenue. And again, I think that shows that these businesses are not only highly diversified in terms of the different brands they have under their umbrella, but also in terms of their geographic diversification. This one is the one for Pernod Ricard. Then finally, to wrap up the discussion on the attractiveness of the industry and maybe the similarities between beverages, alcoholic beverages, and tobacco, I mentioned that in both industries you have regulatory constraints. And you mentioned this before yourself, Andrew. Anyway, this is also a double-edged sword, isn't it? Because on the one hand, it might protect you in some way, but sometimes it might also scrutinize your profit generation or generating potential. If I just think of the warning signs on cigarette packages, that's not good for business, at least, right?
Yeah. I think it's definitely more of a Moati aspect, Moati aspect versus a headwind for this space. I really don't think there's too much downside to it. Like I said, there's the downside to it if you're trying to grow a brand without the distribution network or anything. But once you have that, and these brands do play pretty well together because it's an oligo. Obviously, they're natural competitors to one another. They're trying to, grow certain brands, right? Bud Light's, playing against Coors Light or whatever, right? Like they're constantly going head to head with each other.
Yeah. Yeah.
But they're kind of friendly enough where they all play with no one's trying to undercut at a 0% profit margin, right? Like no one's sending out loss leaders. They all typically play well together. They all know roughly the pricing range and everything. They know what the premium price point is. They know what the mass volume kind of cheaper price point is. And they all play pretty well together there. And I don't think that's really ever going to change.
That's an interesting point you make there. Can you explain to me in what way the Boston Beer Company, as I know this is the company you are most familiar with, how does that company benefit from the regulatory regime?
Well, so they have the large distribution network, obviously they've worked on for 40 years or however long it's been. But because they're in a growth category, where I think it really benefits them, arguably even more than the big players, right? Because we talked about the big players, they might see a certain category of growth, but overall to the overall business, it's pretty tough to grow. Whereas Boston Beer, they're kind of so small. I mean, they're doing 2 billion in revenue, in a space where some of the big dogs, like you said, doing 20-30 billion in revenue. So they're very, very small in that sense. And they only really have 5 corporate, right? They have Sam Adams, Angry Orchards, Truly, Twisted Tea, and then you could argue maybe Dogfish Head that they acquired in 2019, which I think really was just to acquire their CEO and their distillery that they had. But so Boston Beer sees a lot of growth, and because they have a distribution network, they can see what's working and then scale that up really quick. They have a good camaraderie with a lot of these distributors. And whereas if you're kind of a no-name brand and you're trying to build yourself up, and if you don't belong to one of these massive conglomerates, it's really tough to get that shelf space, and to get that distribution network. So once again, I don't know if technically that the regulation is as much of a moat as that distribution network, but the regulation obviously is more of a moat here versus something like just the overall beverage category, because the overall beverage category, you might need 1 or 2 licenses to operate, really just a business license and to be approved by the FDA. Whereas the alcoholic beverage industry, there's a lot more licenses and a lot more fees associated with that. So it's just more cost heavy to get a brand started, So.
Yeah. If I were to dig deeper into one of the companies, one thing I would certainly want to develop a better understanding of would be the time and energy and cost that is associated with gaining a license to distribute your alcoholic beverages. I don't have
so this is
for how difficult that actually is.
So this is interesting. If I recall correctly, I don't know about the overall my understanding. Now, I don't know if this applies to beer, but for spirit specifically, the government does not hand out any more distribution licenses. So Jim Cook, the founder of Boston Beer, has talked about this before. He said, if you really want a license to print money, it's to actually be the distributor for spirits. He said, because they don't hand out any more licenses. There's only, I don't know, maybe 15. My numbers could be off here. This is a couple of years ago I heard this. But pretty much the government, the United States anyway, will not hand out any more licenses for spirit distributors. So that is, they can charge virtually whatever fees they want. I mean, they really can't, because there's kind of this 3-tier system, where no one can really take too much pricing. But that's very interesting. And to become a distributor, I don't think it's as easy. I think that is arguably the biggest moat in the industry, is the distribution network. But in the alcoholic space, I don't believe you're allowed to own your own distribution. So because of that 3-tier system. Yeah.
I have one more chart here that shows the shareholder yield of Altria. So the point I'm trying to make here is that even though a sector as a whole or a business on its own may be quote unquote unloved by the market, meaning it's trading at a relatively low valuation multiple, this does mean that you can't enjoy good returns in these stocks. So Altria, as we have shown, has performed tremendously over a 100-year time period, I think, but I think the business also performed well over shorter time periods. So what you can see here is the shareholder yield, which is basically, I think it's the sum of the buyback yield and the dividend yield. So how much cash is actually distributed back to shareholders directly. And we can see that the shareholder yield has been pretty high over this time period. So ever since I think it's the last 5 years, basically, right? We're looking at a shareholder yield between 8 to 13%. And if you have a smart capital allocator at the helmet of the business you are owning or looking at, he can create tremendous shareholder value if he understands when to buy back shares, when to pay out a dividend, when maybe to pay out a special dividend, and so on and so forth. So just because the alcoholic beverage sector is, again, unpopular right now, this would not be something that made me look away.
Yeah. It would have to be cheap. Certainly, the businesses would have to be cheap enough. The other aspect, though, that I don't like with this space, by and large, I think Boston Beer is probably one of the very, very few, if not the only, with a pristine balance sheet. Because here's the thing, and it's not just alcohol, it's most industries where it is a very, very stable industry. These companies get too comfortable, and because they can get cheap debt, they take on that cheap debt. Boston Bear could get cheap debt. They historically typically don't ever. They have a couple times here and there and then pay it down right away because Jim Cook still thinks like a business owner and he still thinks back to the days when he founded the company. He never liked debt. So yeah, that's one of the issues in this space too. If you're like me, that really strains the balance sheet. Yeah, are the cash flows super stable? So you probably don't have to worry about the over leveraging. It's just for me, it's a massive turnoff, and that's why I think that's also one of the only reasons why I think Boston Bear sticks out to me. They have like I don't know however much cash they have zero debt. I forget the exact number off the top of my head, maybe 300 million or something in cash, no debt.
Yeah, great point. All right, what to look out for? And so far we were, I think, primarily mentioning positive things that we associate with that industry. I'm going to point out a couple of risks in a second too, but maybe to wrap up things I like here, I'm going to address the topic of premiumization in the alcohol beverages industry once again here. I'm going to show our viewers this chart here from the Diageo Investor Relations presentation once again, which shows their Scotch portfolio in terms of a different price range. So they basically distinguish between value products, which cost around, do they have a price here? Yeah, they do. Would be a Scotch under $15, then a standard Scotch for around $15 to $25. And then it goes all the way up to luxury, where a single bottle will cost more than 250 US dollars. And as we discussed earlier, that is actually, I'm not sure if you can call it a trend, but that is something I like to see, that you have some products within that category where the company is able to charge a price that is certainly significantly higher than the cost it takes to produce that product. And I actually read another news today with regard to Pernod Ricard, because they were actually selling some of their Nordic brands. And apparently the company commented that this transaction will, and I'm going to quote here, enable Pernod Ricard to focus its resources behind its portfolio of premium international spirits and champagne brands that drive the growth of its business in line with its premiumization strategy. So apparently for some of these businesses, focusing on the premium brands is actually part of their business strategy, which I think is something to interesting and to be aware of as an investor. That is something I would like to see. And the other thing to look out for that I noted down here is that consumers are increasingly choosing spirits over beer and wine. That is also something we discussed previously. I think I read this also in the Bloomberg article that many consumers are nowadays taking what they called a multi-category approach, meaning that they are maybe a little less loyal than they used to be, and they're actually switching between the categories more frequently, which again, from an investing point of view, is something that you don't like to see because it basically reflects that there's less, as I said, loyalty, you might call it stickiness, in that industry than there used to be in the past.
Yep. Yeah, more
This,
opportunity, but definitely I am finding that too. Less loyalty, especially to the older brands. I mean the younger generations coming in, they are far more experimental than my parents and their parents before them.
Absolutely. And this is actually a great transition to the risks as well. So you just mentioned younger consumers, Gen Z. They consume less alcohol than older generations, right? So that's certainly partly what should be considered a headwind for these businesses. Again,
Yep.
and yeah, go for it, Andrew.
Oh no, I'm just agreeing with you. Yeah.
Okay. To quote one last time from the Bloomberg article there, the authors wrote, "The great viniculture nations like Italy are having to adapt to the waning popularity of red wine as younger drinkers opt for trendy craft beers and fizzy whites or swear off alcohol entirely." That is what we discussed before, right? So that would be something that would worry me as an investor. Generally speaking, I like to invest in companies that enjoy secular tailwinds, not headwinds.
Yeah. Well, like I said, it depends where that company is positioning themselves. So I don't want to keep bringing up Boston Beer, obviously, especially we're talking mostly spirit companies
Go
here,
for it,
where
yeah.
spirits really isn't too much of their business, but or any of at all really. But yeah, if you can just be at least have kind of a beachhead wherever a brand's set to go, or they're kind of established anyway, and then whenever those that trend takes off, at least you're already there, and that's kind of what Boston Beer has been very, very good at. And like I said, they're small enough where any real takeoff in a category is going to affect their business and to the upside, which obviously does affect them to the downside if a bubble or something ever pops in that category, like we've seen with Truly. But like I said, these other brands where especially wine, which is kind of what this comment is about. If you're vineyard, right, this viniculture nations, if your vineyard pretty much is primarily red wine and that's not what's in trend anymore, I mean, yeah, that's going to be a massive downfall to you. But yeah, overall, yeah, there's the trend is definitely against alcohol, like I said. So you really want to position yourself well within that category. It's kind of like retail, though. I mean, well, I guess retail is technically still growing, but I mean, physical in-store retail, right? That's something that's dying. But the likes of Amazon, Shopify, whatever, like there's still growth within that category. Even though the category is relatively flat to maybe up a couple percent, there are some sections of that category growing double digits, and then there's some that are shrinking double digits at the same time. So you just need to position yourself within the category properly.
Yeah, great point. That's what I noted down here as well. So in a way, these companies just have to embrace these shifting trends and have to adapt accordingly, which obviously some businesses and some business operators will do more successfully than others. Sort of related to this, I think, and I don't really have a view on this, to be honest, but you would have to understand how these trends are developing in emerging markets, because I feel like these shifts away from alcohol are more of a quote unquote Western phenomenon. My understanding is, but I might be totally off here, but I think in some emerging market countries, with the prosperity that the population is gaining there, comes also willingness to access maybe global alcohol brands and enjoy them. I might be completely off here again.
I think you're right. I believe like Suntory. I don't know if that's a Japanese brand or something, but they've actually been doing okay, if my memory serves me correctly as well. So I think there's certain Asian populations
and
that are growing.
I think the some of the alcohol beverage stocks we discussed so far, they have actually reacted positively to the China stimulus news. I think, which sort of indicates that there is some truth to the assumption I was articulating.
Yeah,
Then
yeah.
I think another risk that you have to be aware of is the rise of private label brands, which seem to be able to more quickly gain traction nowadays. And also, I refer to them as quote unquote influencer brands. So that is something you do not only see in other non-alcohol categories, but also in alcohol categories. Maybe I should have done some more research here, but I remember from my video on Diageo earlier this year, I came across at least 15 brands in the spirit space that were
Yeah,
launched by quote unquote celebrities that quite quickly were relatively successful.
yeah, what I've noticed, and I don't know if there's data to back this up, this is just purely anecdotal. Those are far more of a trendy thing and far less sticky, right? Like once again, going back, I
Interesting.
always go back to Boston beer, right? Which, by the way, that I can't really, I'm not really too educated on the emerging markets and stuff. That's strictly because Boston beer is like 99.99% in the US. So I don't know about, outside that. But yeah, so these like, celebrity backed brands and stuff, Casamigos and all that. I do see them shoot up and they probably get to scale very quickly. The long term longevity, the long term loyalty to these brands, that's not something I'd be willing to bet on. I feel like they lose steam pretty quickly as well, especially when they are, like you said, kind of like private labeled or whatever. They're typically not actually that great of quality. So it's like that, yeah, there's a brand name slapped on it. It causes a lot of buzz around it. But when people go out and try it, they realize, oh, Jesus Christ, this actually isn't that good. So, yeah, I personally, it's nothing I would worry about. It's also not anything I'd base an investment thesis on.
Yeah.
It's kind of
I've actually
irrelevant.
never thought about it this way. However, to be honest, I'm not sure if the average consumer actually knows that one brand is primarily associated with one celebrity. Maybe that popularity only helped whoever that person may be to get that brand off the ground. But do you think the average consumer is explicitly buying these products because it is
To start
associated with?
anyway, because a lot of times they're launched with campaigns behind it, and it's, oh, did you see Snoop Dogg's new Snoop Dogg's new product or whatever,
Yeah.
whatever the other ones are there. But yeah, normally it's associated with that individual. Like I said, if it's a celebrity backed brand, now if the brand lasts for a while, more than say a year or so, and the sales are still strong and everything, maybe there's a good product actually there and a good story that they're telling, because a lot of alcohol and a lot of the alcoholic sales, it's really the story. It's finding a consumer and really really going there. I mean, really any consumer based product, that's what it is. But specifically with alcohol too, it's like trying to tell that story and stick with that core consumer. So some of them might work out, but it's nothing that I'd lose sleep over, certainly.
Yeah. Then I think the last risk, and this would actually be my personal biggest concern, would be the growth rates going forward. And also, if we look, and I'm going to share a slide in a second again, if we look at the historical growth rates, they have also been subpar. Let me put it this way. So the question I think investors have to ask themselves here is the quote unquote growth story for these big, I don't know if you want to call them legacy alcohol companies, is it over? And the companies aren't trading at insanely cheap multiples. So if we go back to the enterprise value to operating income chart I shared earlier, many of these names are trading in the range of, say, 19 to 23 times operating income. And that's taking into account the debt, right? Because you mentioned some of these brands or companies might be sort of highly leveraged. Two names here are trading at a sub 15 times multiple, which I would consider cheaper. But we're not looking at complete bargain prices. And if we now look at the growth rate, let me just find the chart here. So maybe we start with revenue because That's maybe a little more consistent than free cash flow. If we look at the 10-year compounded revenue growth rates of some of these names, we are for the most part looking at single-digit growth rates, and oftentimes low single-digit growth rates. Sometimes even, let me check because it's so tiny. And it's not negative growth, but low single-digit revenue growth over a long time horizon, 10 years. Mm-hmm. If you only compound your revenue at a rate of, say, 5% over 10 years, and there's not all too much operating leverage left for your business, you're likely not going to end up with great long-term returns. And
yeah, no,
I don't see this changing going forward, to be honest. That would be my biggest concern.
It's very similar, right? And this is, like I said, we're talking the category overall. Like I said, there's obviously certain growth within that category, but as the industry overall, it's very similar to how I view like utility companies, right? Very stable industries. The cash flows are by and large on a year by year basis very stable. You have small fluctuations here and there, and they're great industries to work for. I myself work for a utility company, but I'd never invest in one. It's a great industry to work for. It's a great industry. A lot of these companies will pay dividends or whatever, right? If you can get the companies cheap enough, right? They're great for income, but long term compounding, by and large, they're not the best for. So there is a certain investor base that would benefit largely from most of these companies, but it's definitely I'm not one of those. You're right. So
yeah, so I could see myself investing in one of these companies if the valuation gets cheap enough. If we're looking at a valuation, say around 10 times EBIT or free cash flow, normalized free cash flow, and I would see myself holding that stock maybe for a shorter time period, and then some of the return, or maybe even the majority of the return, would come from an expansion of the multiple, just because I think, let's say you could own Diageo, and maybe that's an extreme example, or let's say you could own that business at 10 times free cash flow, the downside is probably very well protected. But if the multiple expands to a more normal level, again, you might still see great returns. So that would be a setup where I would be interested. At 20 times, say, EBIT or free cash flow, it's not like I get overly excited, to be honest.
Yeah, no.
You're probably
Boston, but Boston Beer, just I know, not to rant, but I know they say like 20 times EBIT or something, but if you normalize that out and go more of a normalized SG&A, they're probably actually trading more closer to like 10 times EBIT. But
yeah, and I could totally see investors making the case that due to the attractiveness of the industry, you just mentioned the stability, predictability that comes with it, maybe a 13 times more quote unquote bond-like multiple could be justified, but that is not something I want my investment thesis to be based on.
Not for us, and probably most of your viewers either, if we're focused mainly on growth, which most of us are. Like I said, it does have its audience. It's just I'm not one of them primarily.
Yeah, funnily enough, I shared it on Twitter today. I made a critical comment on Palantir's valuation at, I think, adjusted for stock-based compensation was north of 500 times free cash flow, and someone commented, "Stick to your value and dividend stocks."
I didn't know you focused on dividends.
Point out that you associate me more with growth than value.
Yeah, I mean, there's quality growth, and not to say Palantir won't work out. That's not one I know enough about to really comment on. I'll pull the Charlie Munger. Nothing to add.
Yeah,
I will say that price to sales
too, but sometimes I can't hold myself back.
Yeah, the price to sales is pretty egregious, even for some of the best companies. So I don't know. It could work out. It's nothing I'd be willing to put money behind though.
Yeah. So what I wanted to ask you is, and I'm not sure if you have a strong opinion on it, how important is management in the alcohol beverage industry?
It's everything, right? It's you have a very stable.
Would you say it's more important than any other, not any other, but say compared to an average industry? That doesn't make any sense, right?
I'm probably not the best person to ask, because it's management is always always super critical for me. And it frames, I don't need the best management if it's just like a valuation trade or whatever. Like if I think it's an undervalued company that should be worth a lot more, but I know I want to sell it, right? Management doesn't mean an awful lot to me. But if it's a company that I'm really looking to hold on to for the long term, I mean, you're essentially entrusting that management team with your own capital, right? To do well with that capital and to put it to proper investments that would have a solid return, whether that be buybacks at the right time or investing in new brands or whatever, or paying down debt. So yeah, I mean, I think it's just as important for this industry as it is for virtually any other industry. I always think management is extremely important. Yeah.
Yeah, that's probably generally true. What I would maybe be thinking is if you manage a broad portfolio like the portfolios of Diageo and Pernod, what is it called? Pernod Ricard. I always mess up that name. Anyway, if you manage such a broad portfolio, you probably have a hard time messing it up completely. Whereas if you manage a smaller portfolio, like maybe the Boston Beer Company, more managerial skill.
This is true. Yes, I mean because they're more conglomerate, like great, like you could have a bad manager for a very long time without seeing extremely detrimental activity to the overall business performance. But yeah, I mean over the long term, management is very important. But yes, it is a stable enough industry. I think this is what we should say. It's a stable enough industry where you could have many years of a very bad management team and trust that the board of directors will eventually get them swapped out before anything, permanently detrimental happens to the company. There'll be plenty of warning signs that the management is very bad before anything permanently detrimental happens to the business. Yeah.
One more little anecdote comes to my mind here that you have shared with me, I think, on various occasions now. Can you tell us a little bit about the Boston Beer CEO buying back inventory from, I think, a distributor?
Yeah, so that's
why that is so unusual and why you cherish that as an investor.
Yeah, so not this CEO. I know everyone says CEO. He's actually admitted he's a very bad CEO, and he hasn't been the CEO for like 20 years, I think. But he is the chairman, founder. He still owns all the voting shares, and he still walks around. I actually have a friend that works for the company, and he literally sees him like on a daily basis. He's just still walking around. He's just one of the guys. So like to me, if I could be a CEO, that would be like that would be or a founder of a business. Like I'd be like that guy. I just but yeah. So I'm sorry. What was the question again? I kind of went off topic.
The question was about the unique decision of
yeah. So he's actually written a book, and this isn't the first time he's done something this extreme either. Years ago there was an issue where there was a microscopic chance and they actually almost went out of business due to this, but luckily it ended up working out where they had a lot of loyal customers due to them doing this. But it was a very, very small chance that there could be a slight piece of glass in their bottles. Mind you, they were not at scale at the time. They were still a very, very niche small business, and they had to essentially recall all of their product. And his lawyers and everyone said, I wouldn't even bother, you're going to be fine. He himself was like, I can't sleep at night. I know this might put me out of business, but I don't care. I'm going to recall all that, because the last thing I want is one consumer trusting having my product and them getting injured because of it. Like he just couldn't sleep well at night. So, but he's also a fanatic with the quality of his product, right? So fast forward to post-COVID, after the growth at all costs, investing into Truly in the hard seltzer category and that bubble popping, distributors, as we know, buy the product off of the actual beer makers or the beverage companies. So Boston Beer had already recognized that revenue, all was well, but the distributors were stuck with all of that inventory. And so they said, typically what they do is they just mark it down and try to sell it, right? So you'll see these massive sales, 25% off, 50% off, buy one, get one, whatever it may be. That's up to the distributors to do. well, Jim Cook, because he's such a fanatic with quality is like his number one thing, and because he doesn't have a board of directors really to answer to. At the end of the day, it's his decision. Well, he does have a board, but you get what I mean. It's his decision at the end of the day. He said, no, I don't want, because beer does have a shelf life. People don't really think it does, but beer can go bad. It can kind of get skunky and stuff. So he said, I'm going to do right by all of my distributors, instead of them having to struggle, mark some of this down, maybe sell it at a loss or break even or whatever, and worry about all of this inventory and shelf space being taken up. He said, I'm going to buy it all back from you. So Boston Beer literally bought back all of that inventory that wasn't going to be sold, and they actually crushed it. They literally were crushing the hard seltzer, and I think they had some parties with it or whatever at the company. Like they made fun of it, but yeah, that cost a lot of money to do, and that's still slightly affecting them till this day. But that is very very few managers would be willing to do that, right? But that's because it's his baby, it's his company, and that's what I look for in investment. That's someone you can trust. That no matter what happens, they're going to do the right thing. It might not always be the best short-term decision, but that's how he's built this reputation over many years, and that's what I want to align myself with, right? So I don't care. I'd rather
That's
take the short-term hit.
Super interesting anecdote. That's why I asked you to share it publicly here again. I think it really shows how
and
that
I think
particular management team is thinking.
And when the distributor, right, and this kind of goes back to the future moving forward, next time there is massive growth in a category, if there ever is to be massive growth again, what brand they will put on their shelves and order a bunch of stock from is going to be Boston Beer. Why? Yeah. Because they know that they're going to make right if that inventory doesn't sell, right? They'd rather invest in Boston Beer's inventory, because they say, hey, we might be reimbursed if this doesn't work out, than, X, Y, and Z corporation that's going to say, oh, sorry, you can't sell the inventory. Better luck next time, So yeah, he's always thinking long term.
So Andrew, what would be your concluding thoughts on this discussion on the industry as a whole?
Yeah, industry as a whole. Well, obviously,
but what I mean is, are you interested in looking at some of the other companies we discussed today?
Yeah, I have looked at all of them, but for me, it's tough right off the bat, is that balance sheet, honestly. Most of them I'm super anal with my balance sheet, though. Like, I like more cash on hand, cash on the book, than actual real debt. Some people might say, oh, a multiple of 5 times earnings, whatever it may be, debt to equity ratios. Like, I'm literally, I just like I run my own bank account. Like, the second I have a credit card bill, like I like to pay it off at the end of every month. I'll carry the credit cards over. So my businesses, so most of these companies are flooded with debt. And so that's really a real issue. And then tack on the fact that they're not obviously founders. Most of these brands have been around for hundreds of years. Yeah, it's tough for me to get over that hurdle. But of course, if it were to get cheap enough, would I maybe invest in one of these as like a valuation play? Yeah, I might. But to hold for the long term, I mean, like I say, Boston Beer is probably the only one in this space. We didn't really talk about it, but Constellation Brands is actually doing a very good job too. Ticker symbol STZ, I believe. That is an actual interesting company in the space. If anyone is interested in looking at them, valuation probably is there for me, and same thing. I don't know about the management and the debt situation over there, though.
Yeah, I agree with you. And to avoid repeating what you just said, let me just summarize it by, at the right price, I would be willing to take another look here. But for now, I'm going to pass on these names.
Yeah. Okay, Andrew. Like I said, I say at the right price, but for me, most of them I would be expecting to sell, though. I just don't think the long-term capital appreciation would be there. For most of these anyway.
100%. Thanks for your time, Andrew, and we'll talk soon.
All right, take care.